obviously, authorities have been looking for some momentum for the economy for this year. We're already halfway through the first quarter, and the numbers and the sentiment has been really weak. So there was concern that the Lunar New Year holiday would kind of be muted again as far as travel and spending, as we've seen. Granted, the last few years have been disrupted completely by COVID, and then a very weak recovery last year, and kind of hesitancy to travel back to their hometowns and the like. So we were still waiting to see those numbers, and they came out much better than expected. Lower expectations, obviously, but still, like you said, back to pre-pandemic levels, which is a big momentum shift, if you want to call it that, because when the Chinese consumer is mobilized, literally and figuratively, it bodes well for the broader economy as the property slump continues. The overseas FDI investment sentiment still very weak. I'll get to that in just a second. And there's just kind of a geopolitical haze, if you will, over the investment climate into China. And again, we'll talk about that in a little bit. Let's get to the numbers. Data for the travel period over the last week from about, February, what's the date today? 19th, right?
19th,
so
yeah.
Until through February 17th, which is the official travel period through Saturday, 474 million trips during the Spring Festival. February 10th through 17th is the actual dates. It's 8 days, essentially 1 day more than the previous year, but still up 19% comparable period to 2019. Total tourism spending up nearly 8% to about 633 billion yuan. That's 88, very auspicious number, 88 billion US dollars. That again from 2019 numbers, and 36% increase in railway trips, 99.5 million. So people were on the move, people were spending. But again, we have to throw that caveat out there. It doesn't necessarily offset weakness that we've seen in durable goods sales, whether it's car sales dropped off the cliff in January from December, down double digits. So again, you have to see whether this momentum continues. And I just have to add on the MLF rate, investors still looking out for interest rate cuts for the investment community is looking at that. PBOC Saturday refrained from cutting the key MLF, the medium-term lending facility rate, which is now at 2.25%. They did not cut that. They're trying to balance spurring the economy, obviously, against the weakening yuan.
Steve, the FDI numbers and certainly the direction, not particularly auspicious, right? We also have the two sessions coming up as well. Are we expecting sort of policy signals?
Well, we are expecting some policy signals, but so far, of course, they've refrained from doing any big bang stimulus, and they've refrained from cutting, as I just mentioned, that MLF rate, the key one. There's still other rates that they could potentially tweak. We're hearing from the PBOC-backed, let me just see this here. The PBOC-backed financial news is saying that there could be a cut as early as this week in the 5-year loan prime rate, the LPR. That is the benchmark rate for mortgages. So when the PBOC-backed news organization like the Financial News is reporting that, there could be easing coming down the pike now that the government organs are back to work. And as rightfully said, 2 weeks to go until the National People's Congress meets in Beijing starting, March 5th or thereabouts for roughly 2 weeks. So again, we'll be looking for reading the tea leaves to see what kind of stimulus might be coming. But again, that FDI number reflects foreign confidence in China, and it is waning. FDI into China last year by foreign businesses doing business in China increased by just 33 billion US dollars, down 82% from 2022 levels. It is the lowest increase since 1993.